Ladies and gentlemen, on behalf of Kaptify Consulting Investor Relations team, I welcome you all to the H2 and FY26 post earnings conference call of Megatherm Induction Ltd. Today on the call from the management, we have with us Mr. Satadri Chanda, Chief Financial Officer and Whole-Time Director, Mr. Arunava Braumik, Vice President Finance and Accounts, Mrs. Abanti Saha Basu, Company Secretary. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risks and uncertainties. Also, this is a reminder that this call is being recorded. I would now request the management to detail us about the business performance highlights for the period ended March 2026, the growth perspective, and the vision for the coming years, post which we will open the floor for Q&A. Over to the management team.
Yes. Hello, good evening, everyone. Thank you for joining. So, what we'll do is, won't talk too much about the company, and so this presentation as well as the previous ones are already there. However, of course, you can connect with Kaptify if you want a one-on-one, a meeting just to understand our company a little better, if you wish to. But for today, what we'll primarily be discussing is about what went on in this last financial year, and then going forward, what are our plans, and also long term, or you can say medium term, what are our plans. Just for the benefit of those who don't know about Megatherm, we are basically manufacturers of induction equipment and transformers. And so we are talking about induction heating, hardening, various types of metallurgical products, and transformers of various types. And we are exporters as well. We have already exported to about 50 odd countries. So Mohsen, if we can skip this initial introduction to go right to the next slide, that is the transformers. Yeah. So just before that, can you go to the slide where we have the market share? The market size of the induction products. There is a table on the left-hand side. Yes, this one. So as you can see, we cater to these markets, and the market size it's growing rough, and right now, so you can see it's about 1,500 crores, and we are dominant in the fourth row, that is the induction furnace for steel making, whereas the other products we are gaining a lot of traction. We have the technical know-how; it's in-house. And the unique selling point of our equipment is essentially the reliability and energy consumption. We focus heavily on the energy consumption side. That's where all our R&D goes. And wherever we are able to sell one or two products, we are able to retain the customer and or break through into those markets. So the other product, there are many products like this, and we are merely scratching the surface. And there's a lot of potential in India and for us to grow as well. And when it comes to the induction furnace for steel making, that is basically the fourth column. That is where we are a dominant player, and we wish to maintain that dominance. However, these induction products are gaining traction because of green, the focus on green technologies. Basically, to heat or melt any metal, you need energy, and that energy can come from coal, oil, gas, but in this case, it comes from electricity. Unlike other processes like arc furnace and all, you cannot use solar in induction. You can use solar, you can use renewables. So this is gaining traction world over. And across the world, basically, we have this demand for all these products. So export is one of the very important areas that we are going to focus on. More on that in this presentation later. So we are focusing on gaining market share in the export market in these products. Can we go to the transformer side? Yeah. And originally, we got into transformer manufacturing because the products that we make, induction products, they need transformers. But the market is very good. The infrastructure is common, the design, the team is common. So we decided to get into transformer manufacturing apart from my induction furnaces also. And there we are seeing very good traction, especially in across transformers, but more so in the solar or BESS transformers. So this is one area which is booming, and we hope to capture a decent market share in this. So without wasting any more time on the introduction part, let's go to the key performance highlights. Yeah, next slide, please. Next slide. Uh, Mohsen, next slide. The one with the bar charts. Yeah. So we've seen incremental growth compared to last FY, primarily, but we were expecting easily to cross about 400 odd crores of top line this year. We could not because due to the war which started in end Feb, a lot of the export shipments got held up in the towards the end of the year. That was one reason, and another reason was the transformer side, that the growth we were planning, the approvals took a bit more time than we expected, about 6, 7, 8 months more time, because it was what we experienced was it is not just the CPRA approval, but each and every company, for example, who we are dealing with, like Tata Power or uh, RE Plus, Hero Future, GUVNL, Gujarat, or you can say Sprang Energy, part of Shell Group. All companies who we are dealing with, they have all have their own QAPs and own set of requirements for the plant. So getting all those approvals individually, etc., it took a bit of time. Their quality teams had to come and sit with us and change our processes, change the layout of our factory stores and all those things. But now all those are behind us. We have started production of these products from April, and as on today, we already have these transformers are getting ready and the final inspections, etc., are going on. And so now these things have been streamlined. So the impact of transformers will probably be seen from this financial year. Can we go back to that previous slide? Previous one. Yes. So if you look at the second half, basically, let's divide it into two parts. One is the transformer, one is induction. So in the transformer side, we have got those initial orders, about 400 odd MV orders. Have We've got them, and we have started production and deliveries, etc. The order book has been roughly about 30 odd crore, 38 odd crores from this space. We have also received other types from the solar space, solar BESS. Other types of transformers also are there, orders for them, and we have roughly right now about 80 odd crores of orders. And so right now, as we speak, we have stopped taking any fresh transformer order because it will take us up till at least October or to get through these orders. And so we'll open up our order book again sometime in July, August. And vendor validation is it's an ongoing process. There are a number of approvals needed, but we've got them more than 10 leading renewables players. And like I said, orders have already started coming in. Execution has started. We have seen we are seeing the kind of demand that is there right now in the transformer space. So we have decided to set up the fourth manufacturing facility. Which so now we will have two transformer manufacturing facilities. And we are also discussing with many other players for the orders. We are not taking them right now because then the delivery pressure will come, and we don't want to get delayed in those initial orders. So we'll try to push them, or maybe we'll try to get those orders from August onwards again. And product range expansion, we are also trying to get into cast resin transformers, distribution transformers, loco transformers. So we are in various stages of trying to get the equipment or the approvals for the same. And looking at the induction side, so robust order book. Naturally, we had a lot of orders carried over from last year, especially export orders, which could not be delivered due to the war situation. We are hoping the war situation will improve, in a couple of months. So all those orders are going to come into the picture. So from the order book perspective, the induction side, especially the international side, it's looking quite strong. Uh, we have set up, we have converted our LLC into a incorporated. company in the US. We are seeing traction there. And now we are basically in the process of setting up an entire sales network and marketing network across the world for induction products. So there are one or two companies who reign supreme sort of globally. Everybody knows them, and we want to be like them. We want to be a global alternative to those companies. And to do that, some product range expansion was required. So we have entered pipes and tube sector via a joint venture with a European partner. It's in the process. We have already started absorbing their technology. This is basically for pipe and tube welding. This is a about 150 odd crore market in India, but globally it's a very, wherever there's a pipe mill, you need this essentially. And we also started getting into dual track, tri track power supplies. This is very important for foundries for like ductile iron pipes and things like that. And globally also, this is so this was sort of a monopoly product for certain companies who were global players, but now we have them in place. So, we have the products in place now. How to expand? So we have planned, large investment in marketing, essentially, as well as in terms of recruitment. So we have recruited, poached some export oriented teams from other companies, and we are participating. We are planning to participate in basically all the trade fairs, exhibitions. We will set up distributors in all the countries, service partners, and we also have to become members of various industrial associations. For example, India has All India Forging Institute, Indian Foundry Congress, All India, Steel and Metallurgy. So all the magazines, all the industrial, bodies which are there, and they are there in all countries, be it South Africa, be it US, be it UK, Germany, Middle East, Southeast Asia. So we are going to get into all that. So all that work is going on. So it's a lot of work, and but we have to do it. So we have planned more expensive, or rather, we have expanded our marketing budget, but it is going to give us long-term growth for the future. Next slide, please. So this was two. One is the transformer side, and one is the induction business side. Next slide, please. Yeah. So you will notice that although profitability has increased, EBITDA is more or less similar. But like I was saying, that we have increased our expenses. We have got right teams in place. We are in the process of becoming more professional. We are hiring more people for accounts, for sales, etc. Just like a growth company should. And we have our employee benefit expenses have grown by, which is a significant part. After raw material, this is the biggest part. This has grown by about 23%. Other expenses, including marketing, has grown by 17%. And overall, our expenses, apart from raw materials and things like that, has grown by 19%. And with this current team that we have, we can scale to 450, 500, 600 crores turnover. We will not need more people for this. Maybe additional manpower, purely factory labor manpower, which is not going to impact the profitability in a big way. So we have maintained our EBITDA, and that has primarily been driven by spares, which is the after sales component. Another factor in this is that the all the new products that we are developing, including the transformers, so we are giving a little competitive prices just to enter the market. So that we will do for maybe a year and a half. So that is another area where once this is not required, our profitability margins will increase in a way which is going to be more than the actual increase in turnover. Right. Next slide, please. Yeah. So in the near term, what we are seeing is that we are expecting to grow 20-25% CAGR. So essentially, within the next 5-6 years, we want to triple. And the EBITDA should become quadruple, 4 times in the next 5-6 years. So while it may sound a little, especially the EBITDA part might sound a little difficult to achieve or more optimistic, but again, we have to understand that the current EBITDA levels are not a true reflection. we are having a team. We are front loading our expenses. Basically, we have teams. We are doing marketing. So you can say that, for the next couple of years, when we are still in the range of say 400, 500 crore level in the next say 2 years, uh, our marketing expense is going to be high as a percentage of turnover. The HR is going to be high as a percentage of turnover. And maybe to get the initial orders, we'll price our products in a slightly more aggressive way. So, but after those first couple of years, then you will see a very sharp increase in the EBITDA, because as the scale, one is the scale effect. Once the turnover increases, the percentages will come down. At the same time, we'll be able to price our products more comparatively as per the current industry leaders. So this is what we have planned. So a lot of marketing, a lot of hard work has to be done by us, especially in the induction space for the export market. And but we'll get the returns for the next, at least 5-10 years to come. So we want to establish ourselves basically as a reliable transformer manufacturer for niche segments like solar, BESS, data center transformers, industrial transformers, loco transformers, and things like that, and be in global alternative to certain large companies globally for the induction products. So that is basically our ambition, and we are moving towards that. Next slide, please. Yeah. So, like I was saying, that the export side, so India might be a 1,500 crore odd market, but every country is basically a market. So, we are taking various steps to expand our footprint globally. Yeah. Next. So, looking at the growth drivers, basically, so as you can see, there are going to be two areas of growth. One is the transformer side, where right after last financial, even this financial year, which ended, we did about 40 odd crores of transformers, but that is going to be scaled up to 150 and then beyond 200 plus once the fourth factory is established. So that is one growth driver for us. And we are seeing that at least in the medium term, also transformer demand is not going to come down. Multiple factors are there, and this is not just an Indian phenomenon; it's a global phenomenon. Multiple factors are there. One is the data centers, one is the upgradation of the grids, one is the power demand is in general also increasing, etc. AI. AI means again you need more data centers, etc. And the induction side, it's primarily going to be driven by the global market. India, mein obviously, will not lose our focus. We'll keep pushing to get more orders, but global footprint has to be increased by us, and that's where we are doing most of our work in the induction side. So, induction products globally and transformers mostly domestically. These are the two growth drivers going forward. Next, we can skip this. Then there was a table with the financials. Not that. The table with all the figures. Not the balance sheet. It's earlier. It's earlier. The yes, this one. So this is basically just comparing. So if you look at the columns on the right hand side, FY25 and FY26. So that's basically what I was saying. We have our employee benefit expenses has increased by about 4 crores, and the other expenses, which also includes actually a lot of the employee benefit expenses and marketing expenses. So that is again increased by roughly 6 crores. So 10 crores more expenses we have spent here. It is mostly front loading the expenses for growth. And there was extraordinary items to the tune of 75 lakhs. So the PAT is looking at about PAT is coming to roughly sorry, where's the PAT figure? It was coming to I think 23.7, but actually it is more like 24.5 crores versus 21.3 crores because of the 75 lakhs extraordinary items. The extraordinary items is basically some gratuity provisions due to the change in labor laws, gratuity provisions had to be adjusted accordingly. So if you take that out, then it is more like 24.5%, 24.5 crores. So we are balancing the expenditures to maintain the EBITDA levels, but for to have a more explosive growth now, since the products are in place, the facilities in place, we'll spend more on the marketing side. HR, more or less, most of the uh, heavyweight people, it's done. But now the marketing side has to pick up, especially for the export markets. So that will impact. So maybe for a year and a half. But the moment the turnover starts exceeding 500 odd crores, then again we will get the scale effect. So that's why we put the arrows, just to help you understand that those are the two areas where we've spent more. And COGS direct cost, right now it is on the higher side. In fact, it was higher side since February of last financial year. Otherwise, the figures would have been more. And that is expected to maybe, it's primarily because of oil. Now, once oil is more, the transformer oil prices increase. When oil is more, logistics increases for all products. All the epoxy-based insulation, etc., which go into the electrical products rather, they increase. If dollar increases, then most of our electronics imports they increase. So that impact is going to be there maybe for a couple of months, and or at max 6 months, because most of the old orders taken at old prices will run through them in 6 months. So that is essentially what you're seeing with most transformer companies right now. But once they are through, then again, fresh orders are being taken at fresh prices. But once the war situation improves, then I think the real growth will come. We have a lot of export orders right now in hand, I think to the tune of quite a bit, I think 200 crores sort of. So all those things, or rather 150 odd crores. So, so, so we are quite bullish about the future. We have a lot of tailwinds in favor of us, especially because of the green technology, the focus world over on green technologies, and we are quite motivated and bullish. Uh, can you just, Mohsen, can you just take us to one slide, that is the steel sector? Steel sector, there was. Yes, yes. So, looking at the steel industry now, a lot of capacity addition is being done. You might have recently heard a news about Reshmi Group, 35,000 crore, Sham Group, 10,000 plus crore. So these investments are going to come. And as you can see, the construction steel is primarily being driven by induction. And a lot of the large companies also, like SAIL, in fact, we have supplied to SAIL. Even the large companies are taking some portion of their production now from induction, just to balance the CO2 equivalent emissions. Can we go to the next slide, Mohsen? Yes. So as you can see here, the electrical steel has much lower equivalent CO2 emissions. So a lot of companies are trying to balance this out. So we are expecting it's going to be good going forward. It's going to be even better for us. So more or less, this is where we are, and what where we are trying to get at, what we are trying to get at, and now we'll take questions. So I just kept it short, not too much about us. If you want, we can have a one-on-one also. You can connect with the Kaptify team, and we'll set up a one-on-one.
Thank you, sir.
Yeah.
We'll now begin the question and answer session. All those who wish to ask a question may use the option of raise hand, and we'll invite you to ask a question. You may also put your question in the Q&A box. We'll take the first question from Praneeth Bomisetti. Please go ahead.
Hi, thank you for the
Hi.
opportunity.
Hi, Praneeth.
Hi. So I wanted to start by understanding what has been the shift exactly in terms of induction, because if you see our revenues in 2019, they're marginal compared to today's scale. And during that time also, I think we were exporting a lot. I just wanted to understand what happened from that 100 crore mark to today at around 250 crores. So what happened exactly to cause that, and where do you see this growing also? I understand industry growth rate, but I want to understand Megatherms where it exactly wants to grow.
Yeah, yeah. Right, right. So, you see, the induction industry in India has been growing at, in a bad year, maybe 6%, in a good year, 15%. It fluctuates. But we have grown much further because we have been capturing market share from the existing players. So that is the main thing, and that is what we want to continue to do. Like I said, these products, your raw material is electricity. Unlike coal blast furnace, which you're using coal or oil or gas and all that. Here, the raw material is electricity, and if your equipment consume less electricity, that then people will buy your product, and they have to be reliable, of course. So that is where we are getting advantage, being a smaller company compared to I won't take the names, say an American company. If we see a quick change has to be done to the product, if a client is advising us, so we quickly implement those things. In fact, most of the device comes from clients only, and we are able to quickly adapt. Whereas larger companies will have to get multiple layers of approvals, and so they are a little slow to adopt to change. So over the years, this has sort of compounded, and in terms of energy efficiency, right now we are quite good across products. So that has been primarily the reason why we have gained market share, and now we are trying to replicate this same thing in the global market. So that's what it is.
So in terms of market share, where would we stand at today? Because you gave the 500 crore figure, right? So does that mean we own half the market, or is there a different way to look at it?
Yeah, yeah. So you can say, Mohsen, if you can go to that slide which had the market share in India.
Sure, sir. Sure.
I can't see this. Yeah. It's the one with the product photos on the right hand side and the table on the left hand side. No, not this. The one with the market size.
Okay.
Table on the left hand side and product photos on the right hand side. So okay.
I'll just
Till he
say,
finds the slide. So basically, the induction. Right. So we are primarily dominating the row number 4, where we are seeing that around 350 to 500 crores is the market, and of that we are catering to almost. So like for example, a year like this hasn't been a very good year for steel per se. So you can say the market size will be more to the tune of around 350 odd crores. So usme se, almost you can say a half of that we have catered to, or little shy of half of that. But if the rest of our turnovers will come from the other products, foundry castings, induction heating, forging, induction hardening and welding. This welding market we were not a part of till now. We have done a joint venture with a Spanish company, and we are through. So so in the case of row number 4, it's a case of holding on to the lead, and in the case of 1, 2, and 3, it is about gaining market share with the products that we have developed. On the right hand side, you can see so many different applications. So there are many applications that exist. So it's about developing the products and getting into those applications. But the core fundamental is the same. The converter that you need, the static frequency converter, that is the main challenge. So that is where we are excelling.
Got it. So I want to understand in terms of strategy for the remaining induction, we've, I think, gotten to a state I don't think we can grow much further depending about the market. But remaining, you mentioned that the Spanish company JV. Are you also partnering with for the other equipment also with other JVs? And how do you see you gaining market share in these other 4 segments? Because these also are extremely large markets, right, at this point of time. So I was just
Yeah.
wondering that.
Yeah. So for example, foundry and castings market, like I mentioned, we have the dual share, tri-share, hybrid power source. This was till now, it was a monopoly of a company called Inductotherm. They used to supply this for years. So now we have the product in place. In terms of induction welding market, basically, how pipes are made, where in the rolling mills, so pipes are joined and welded. So that welding happens through
Hmm.
induction process. It's a big, it's a roughly 100 50 odd crore market. It was purely catered through by induction and a couple of other foreign companies who have their works here. So we have tied up with a Spanish company. It's called Sigtech Induction, and so we are getting the transfer of technology here to make it cheap. We'll sell it to them also, so that their product also selling becomes easier in Europe, and we'll cater to the market here through the JV and initially through royalty basis. So this is different, and the induction heating and forging market. We have gained clients like Ramkrishna Forge, etc. After which were again dominated by Inductotherm. So we've broken through. So it is like other companies like Tata Motors, Forge, etc. They all use these products. Forging, this goes into basically the auto ancillaries. These products, auto and auto ancillary manufacturers. So we are getting into them now, and so here it is more of technical. The growth is little slow here because you have to first establish a product. Once they understand that yes, your performance is better, the energy consumption is less, then it sells. So that initial inertia is high in these markets, but once the initial inertia is broken, then you can grow. The same thing happened with us with steel. We were loitering at around 100 odd crores, in the steel sector for a long time. But once the initial inertia, once the larger groups like Sham Metallics, Sharda Energy, Rungta, and the larger groups, once they realize that this is a good product, that is when we grew. So we are trying to replicate that in these other products also. That initial inertia will be tough for 1 or 2 years, but then you'll see a lot of traction.
Could you explain, does it have anything to do with BIS standards because of losing, that means it's losing the foothold, or is it just the price factor?
No, not base factor, not price factor. It is basically the establishing the technology. So these are all 24 hours, 365-day machines, and they consume energy. It has to be reliable. Small machine shutdown means your entire plant is shut down. So it is more of convincing the clients, especially the larger clients, that this product is actually going to give you more benefits compared to the one you're using right now. So maybe just getting into the market initially at a lower price, and then once you're established, then you can then it is going to be more like automatic. Then you don't have to generate the inquiries; it'll come on its own, like it is happening with the induction furnace for steel, where we are now.
Understood.
Yeah.
So,
Pranit, may I request you to rejoin the queue, please?
yeah, sure.
We'll take the next question and I request all the participants to limit their questions to two per participant. We'll take the next question from Sanjay Shah. Please go ahead.
Yeah, thanks for
Yeah.
opportunity.
Yes.
So very nice explanation about the company. My question was regarding the opportunity what we are drawing that is outside India, and
Yeah.
for which we are even tying up as a JV
Yeah.
partners, and even analyzing dealership network also,
Yes.
even in Europe, right? So
Yes.
now can you highlight how we compete over there with other manufacturers? How pricey are difference we and versus the peers? Number one. Number two, in this JV, how the pricing mechanism works. Do
Yeah.
we sell at a price what we sell and margin what we do here, and from there onwards they sell as a JV and take the additional margin which we share together, or it is we sell them at par and whatever margin they drive we share each other.
Yes. So actually, two things. One is regarding how we want to compete globally. See, that is the main thing. Induction products. So, for example, a company like Inductotherm, they're the global leader in this space. Their main manufacturing unit is in India. Earlier it was China, now it is India. Most of the large induction company, even ABB and all, they have started to shift their induction production here. India has become a global induction hub. The reason for even for that matter, transformer not so much. It is still China because it is slightly more commoditized. But induction is a highly engineered product, like a custom made sort of engineered product. So it's a very engineering heavy, right from design to production to, so it requires a lot of engineers. So that is where India has a big, even servicing. So we have a 100+ service sales team. Even the servicing is all engineers. So what happens India, where the engineering costs are much cheaper. Average salary for a junior will be 30,000-40,000. Seniors will be, say, 20 lakhs. In China, 20-30 lakhs. In China, it is going to be, $70,000, 60,000. So there is a big difference. And so even Chinese in the induction products are finding it difficult to match the quality and the service that Indians are giving. When it comes to competing with the European products, there is a no, if you are buying a product at 1 crore, if I'm selling it to you domestically, that same product sells in Europe for 3 crores or rather 4 crores. So there is an enormous gap. So the main challenge here is not the price. Price, though we know we'll be able to, they won't be able to match. But the primary challenge here is to build the trust that, why you should buy a Megatherm, why an Indian company. And that is precisely why in the US, we have done a joint venture. For Middle East market, you don't need a joint venture. People are comfortable with Indian products. In Africa, you don't need a joint venture. In South America, you don't need a joint venture. But US, Europe, these places, you will need a joint venture because the perception that why am I buying an Indian product? Hence, what we have done with Cyprium, it's not a very large company, $2.5 million turnover, but they do servicing and all these things, the after sales support of these induction products, old induction products. So they have a client base, and they have 50.1%, we have 49.99%. So it just, but we've kept it like that so that ease of managing the company as per US laws. And what we will do is we will sell it from India at export price, which is typically going to be a 10 to 15% higher price than a domestic market. And then whatever price we sell over there, one thing to mention is that the transport cost will be there, the tariffs in the US will be there. And then whatever markup is done to the end customer, that markup portion is going to be split basically as per the share value.
So 100% manufacturing will be done in India, or it is a part of finishing
No.
portion?
Manufacturing will be done from here. What they might do in certain cases is that the fit and finish sort of in the US is a little better than here. So in certain products like coil box finishing and things like that, some little bit of fit and finishing they will do there. A little bit of touch-ups, for example, in the US, Rockwell PLCs are more. यहाँ पे we use more of Siemens automation and all that. So just automation का fitting and वगैरह. The more US sort of customizations a little bit, not for all products, for some products may be needed, but the manufacturing will be happening here.
Thank you very much. Thank you. That's from my side.
Yeah.
Thank you. We'll take the next question from Hardik Jain. Please go ahead.
Hi, I just wanted to understand for the next fiscal year, which sort of product line would be contributing to the growth, like the most?
Yeah. So if we look at the next financial year, one is of course the transformers. So right now our capacity, like we are trying to start double shift now. We have stopped taking orders. So the transformers is one, and in the induction space, it's basically overall. The overall induction industry is also growing. So and we are trying to push our products in the export markets also strongly. So sort of both, but induction, like I said, it's a little bit of the inertia is a little strong. So maybe 1 or 2 years of hard work, and then you'll start seeing the big results from induction globally. So the initial, you can say, boost will come from transformers, but long term going ahead, like we have envisioned 1,000 crore company over there, transformer will be about 250-300 crores. The rest is going to be induction and after sales and things like that. So long term it is of course induction, but the short term boost will probably come from transformers.
Okay, sure. And amongst the current order book, can you give us a split of how much is it coming from the induction business and how much from the transformer?
Yeah, so if you look at the current order book of around, I think last at least checked 450 odd crores, out of that about 80 odd crores, we have 85 crores we have of transformers.
All right. And are these contracts passed through?
Sorry, pass through as in?
Like if there are any increase in raw material prices, or are these like on a fixed price tender?
No, these are all fixed prices.
Okay, fair enough. And any capexes that we are planning for this year?
Yeah, fourth shed. So we are making another shed for transformers. So the fourth shed is going to be there.
How much would that be quantum?
Yeah, it's somewhere around 20 odd crores of capex will.
All right. And so just a last quick question. How much cash are we sitting on right now?
Right now, about so if you look at the CC, etc., if you look at purely the FDs, we are looking at sitting at around 26 odd crores.
26.
6 and यहाँ पे cash and cash equivalents are showing as 60 crores. That is primarily because of the CC limits that we have. We have shown it as a liability, but we have not utilized them.
All right, fair enough. Do we have any sort of cash raising perspective in the current fiscal year? Is the current balance sheet
Not
is
not
strong
in
enough?
not in the current fiscal year. Not like in the first half, maybe towards the end of the year, because our time period for 3 years to migrate to the main board will finish in March 27. So so when we are migrating to the main board, at that point of time, we will plan raising to for the next level of growth.
All right. And just to clarify, since we are targeting the export market now, would there be what sort of effect would it have on a current working capital cycle? What are your
Yeah.
expectations?
No, working capital cycle and inventories will increase, not because of the exports. It's going to be mainly driven by transformers. So, like
Right.
transformer is a more longer lead cycle, similar to induction, not that different, but induction is more granular. For example, I make one product, I sell it. But in transformers, you sort of have to buy the material in bulk and you have to stock it, and then one by one they start selling, after inspections and all that. So that's why essentially we are sitting on the cash. So once we start executing the transformer orders, the cash will come into the picture.
All right. That clears it. Thank you.
Thank you. We'll take the next question from Pawan Kaul. Please go ahead. Pawan?
Yeah, can you hear me?
Yes,
Yes.
Pawan.
Okay, great. Could you give me a split of segment-wise, how much revenue did we have from spares and transformers this year?
Yes. So if you look at about 350, I don't know the exact figures, I'll give you a rough. So if we
Sure.
have about 350 odd crores, we did roughly about 70 crores from spares this year, and about 40 to 45 crores from transformers. Like I said, spares is an important factor. Essentially, when we were doing 10, 15 odd crores of spares, our bottom line was in the single digit crores. Now that we are doing 60, 70 crores of spares, it is in the 2025. And spares is a function of how many equipment you have sold in the past. So they keep piling up, piling up, piling up. So, it is gradually going to grow. So when we look at about 100 crores of spares, say maybe 3, 4 years from now, then the bottom line will be much more. So generally, capital goods industry works like that only. Like when you buy the car, the companies will sell it at you at a much lower margin or maybe no margin. But when you have to buy the spare parts or when you get into an accident, then you'll see the bills. So that's how more or less the capital industry, capital goods works.
Understood. And the spares order book you mentioned was about 70 odd crores. So what is the duration of that order book?
No, spares order book is not 70 odd crores.
Sorry, transformers.
Yeah. So that's the point. We have to execute it as soon as possible. People will not wait for more than, I think, beyond September, October. So we are trying to wrap this up within that time.
Okay, so for next year onwards, I was trying to understand the 50 crores of transformers business. What are you looking at in terms of growth? Because that'll be a big growth driver, and given
Yeah.
that you're also putting up another manufacturing facility
Yes.
and going second, so what's the outlook for the next couple of years for this division?
Yes. So, we are targeting within 2 years' time. See, this year we had targeted, although in my previous presentation, you'll see we have targeted about 80, 90 crores transformer business for this this coming FY27. But we already have that order book, so we are trying to stretch that to near capacity, that is 150. Coming financial year, we have projected surely, FY28, surely we should try and get 150. And if by that time our another shed will come, so we'll add another, say, 100 odd. So within, say, 2-3 years, 250 odd crores from transformer we should get. But at
Okay.
the same
And
time, we would like to highlight that we are not trying to become a Terrell or Voltamp. So we are not looking at 200 MV, 100 MVA, 220 kV, that kind of transformer range. We are trying to play in the niche segments, primarily the rectified transformers, multi-winding transformers like solar, BSS, loco, things little the niche sectors basically.
understood. And you mentioned earlier in your comment that these are fixed price contracts.
Yeah.
So over the last quarter or so, have you had increases in raw material prices? And has that impacted the margins of this division? And how are you assessing pricing for your next level of contracts? Because you also mentioned that you have to give discounts on newer transformer business to clients.
No, you're right. So there is an impact, as you can see with other companies also. The raw
Yeah.
material prices have increased. But one thing for us, how we are able to sort of manage everything is because we have this element called spares, and that price is basically determined by us. So of course we can't charge anything. We have long-term clients, they also know. But but those are like immediate requirements. So the prices keep varying. So that sort of helps us to keep our bottom line stable in spite of headwinds. So that's how we manage things. That's also how we manage our discounts to capital products and things like that. And so this year we have made very ambitious target of increasing our spares business across the world to help us keep the bottom line intact. And we will be spending more on marketing also this financial year. HR cost is also going to be high. So we will utilize that spare business essentially to keep the bottom lines stable. And what was the second part of the question?
How are you planning on managing the cost since these are fixed price contracts?
Yes,
When you're
so
pitching for new customers?
Yes. So this is how. So what we do is we play around with the spare prices and to manage. And I expect, actually, personally, I think this whole war type situation, it should be wrapped up in 1 or 2 more months, because I don't think beyond that, these sort of elevated oil prices are going to be sustainable even for the US economy. So I think 1 or 2 months it will wrap up and prices will start coming back down to more regular levels.
Understood. And your export contracts you mentioned, are these FOB or CIF contracts? So are you bearing the freight cost as well?
No, strictly. So earlier we used to do CIF, we have suffered. So it's
Okay.
strictly either X-Works or FOB.
Okay. In your presentation on slide 24, you mentioned under induction business revenue traction, FY27 revenue visibility of 400 plus crores.
Yeah.
Now, I'm assuming this is for the entire business and just not for induction, right?
Yeah. For the entire business means we have about 250 odd crores of carryover orders, essentially. So that is all induction. So we are
Okay.
hoping for a very good financial year this year, provided a lot of the large contracts are in the Middle East, actually, Dubai, Saudi, and things like that. So if that region stabilizes a little bit, then there's nothing to think about it. It's going to go much beyond.
Okay.
One,
Last question for me.
yeah, please.
Just one last question. Just the realization on the transformer business.
Yeah.
What is the realization right now at? I think last time it was about 7 lakh rupees per MVA.
Yeah. So right now, if you ignore the past orders, so there are
Yeah.
some orders which are still at, I think, 7 lakh rupees. But right now, if you look at it, it is at least 10 lakh rupees. So 1,000 rupees, in fact, 1,000 to 1,200. You can say 1,000 if you combine all the products. 1,000 rupees per MVA, that is sort of like the norm right now.
Okay, got it. Okay, thank you so much.
But it is not just for us. I mean, it's more generic right now. If you try to buy a transformer, you will know if it's a 5 MVA transformer, at least 50-60 lakhs. If it's a 10 MVA transformer, 1 crore, roughly.
Okay, understood. Thanks.
Thank you.
Thank you. We'll take the next question from Adishwar Golcha. Please go ahead.
Hi, am I audible?
Yes, Adish.
Great. So I think from the previous call, we mentioned that after the transformer expansion, we are going to expand the induction capacities as well. If you can give me the unit-wise capacity breakup, that would be helpful.
Yes. So see, while transformers can be explained in total MVA like 2000 MVA or 3000 MVA like that, it's very difficult to give transform furnaces because it can be a small equipment which is highly complicated, or it can be large. You have 5 kilo furnaces, you have 50-ton furnaces. So induction made is a little difficult to give it unit wise.
Revenue-wise would do, yeah.
Yeah, revenue wise, we can do it. So revenue wise, so what is essentially happening, a lot of the induction factory space even today is being utilized by transformers. So as we expand the transformer and we get more and more and more detached from the induction, so that is freeing up more and more space for induction. And unlike transformers, which is more so you have, you say you have a steel plant or a forging unit, you have rows of these rolling mills, and or if you are making, suppose, say Balaji Snacks, they are making chips. You have these machines which are producing throughput. So you can calculate those things. Transformers not like that. It has winding machines, it has vacuum autoclaves and things like that. But still, you can put a finger on and say, okay, it's like a one piece moving through different stages. Induction is completely different. It is like you're essentially building a plane, you can say. So the machine goes in one place and then the people come with tools and they assemble it, sort of like that. So that's why space here is critical. Induction is not more, you'll see like the investment, our fixed assets are not much. So induction made is more of space and the input and the complexity and things like that.
Got it. I think I was trying to mean that what's the capacity which the revenue which can generate from all the 4 units which we have. We have
Yeah.
4 units, right? So if you
Right now,
can give a
fourth is coming up.
okay. Okay.
Yeah, so if we consider steady state, and there are a lot of we are trying to do the projects also where we buy and sell, and we do the servicing and the erection commissioning and that part. So if you
Right.
combine everything, including the projects and everything, with the current if we have the 4 factories in place, we should be doing 500-600 crores, and that is basically our cutoff line. That once we sort of see the visibility for that, immediately we will go for the next level of growth, and we'll raise funds and we'll go for the main board listing. So that is what we have
Yeah.
planned essentially.
Okay. So out of 500 and 600 crores, what's the breakup between induction and transformers?
Yeah. So say, let's say simpler figure 500 crores. So if you look at 500 crores, you can think of about 150 crores of transformers. You can think of about, say, 80 odd crores of spares, and rest you can think of induction.
Got it. And to understand the spare business, I think, can you just elaborate on to if I want to forecast uh, how much will be the revenue from the next financial year given an installed base and certain percentage that we can expect because it's a high margin business.
Yeah. So thing is, so spares, for example, spares of your cars, you can't really, it's more accident oriented. So you can't predict exactly. But what we have seen historically, that as our company's top line has also grown, so has the actual value of spares also, and it has sort of been 20% throughout. Like when we used to do 100 crores business, it used to be 20 crores. When we used to do about 250 crores of business, it was around 50 crores, and now we are doing 350 business and it is 70 crores. So sort of by accident, it is, but we take it as a thumb rule कि भाई मुझे 20% spares चाहिए.
Okay. Uh, okay. So can we calculate it by using this much, uh, installation has been done, and although our target is 20%, but like what's the cap? What number we cannot go beyond that?
So if you say right now, like as of today, whatever installations we have, so we give warranty period for 1 year. So the first 1 year we don't get any business, and then years 2, 3, 4, the requirement is less. As the equipment starts aging, these spare requirements keep coming in. So you can it's difficult to put an exact figure, but if you're looking at but of course, we can't say that once we're doing 500 crore business within say 2 years, immediately 70 say 100 ho jayega. That is also tough. That's why I said maybe when it's 500, you can think of 80, 85 crores of spares. But it's purely like it's why we can't say any figure is that these are accidentals. Like there is some coil puncture. There is some voltage fluctuation and devices in the converter they blow. So you'll need spares. Maybe because of sponge iron dust collection, your changeover switch will blast. So it's more of accidentals, or maybe somebody is not doing proper maintenance, poor maintenance of heat exchangers. Uske liye the devices got spoiled. Things like that.
Got it. So now just one last question. I'm sorry if the question is repeating because I missed the earlier part. You mentioned we also need one capex to reach 1,000 crores of revenue, right?
Yeah.
And how much will that be? And also, given our previous year capex which we were doing, they were getting some subsidies from the government. If you
Yeah.
can also give me what subsidies we are going to receive for the next capex, that will be helpful.
Yeah, so right now, so the central government subsidies we will get, I think some money we are due to get. I think to the tune of Mr. Arunabha, what is the amount we are supposed to get from MEITY for all the investments made in FY 2025? Mr. Arunabha, are you there?
Mr. Arunava, you can unmute and answer.
I don't think
I think he's facing some issues there.
No problem. We'll get that across. So typically we have received payments in 3 tranches so far. Right? We get 25% capital subsidy essentially.
Right, sir. The
And
third phase is already in the last stages.
yeah,
Principal approval we have already received, and
okay.
we're in the last stages of document verification. So we
Yeah.
are
And
up
what
for
is the
another
amount?
3.5
What is
crores,
the
around
amount?
3.5 crores.
3.5 crores. So this
Yeah.
keeps coming, and now with the new Bengal government also, they are I think planning some new schemes for industries. So definitely we'll apply for those as well.
Okay, so for next 2 years, it's going to be capex is going to be around 5-10 crores, and after third year, there will be one big capex of 30-35 crores, and I think that will help us to reach 1,000 crores.
Yeah,
If I
yeah, yeah.
Okay, great. And just one request to Kaptify consulting team is that if you can also, make the presentation more detailed, for example, giving more segmental revenue, that would be helpful.
Okay, okay.
Sure.
Thanks.
Sure.
Bye.
Thank you. Thank you, Adisha. So we'll take the next question from Ketan Chheda. Please go ahead.
Yeah, hi. Am I audible?
No.
Yes, Ketan.
Yes.
Yeah. Thanks for the opportunity. One is I'd like to understand, you said about fundraising a few years down the line,
Yeah.
but won't no the amount of business that we will be doing and the cash that we will be generating, won't that be sufficient for our growth plans?
Yes, very, very important question. So, historically, and some of my clients have also, explained to me this, and we have experienced it also firsthand ourselves, that in businesses which require a lot of money for the operations, means the working capital essentially in these sort of businesses, and and in capital goods is basically a little bit cyclical. Sometimes there's a lot of order and then the client will not lift. So you're stuck with enormous finished goods. Cash is getting drawn into finished goods basically. And then sometimes there are situations where people are throwing advances at you and you don't know what to do with. So this sort of exists. However, it is very important that in this type of business, we don't divert our working capital or profit funds to fund our capex. By principle, I've made it a point that if we have to do capex, it will be equity loan. I don't want to use our working capital money, because what happens, whatever profit we get, we are projecting more business. So more and more working capital will naturally be required. So, by principle, and we have experienced this in the past also, that, no way we want to block cash, working capital cash in fixed goods. Fixed goods has to be the loan, or equity, and working capital will be always required. All companies which are into industries, they're always hungry for working capital. So otherwise your growth gets stunted. So this is, my rationale.
Yeah, my only input here is, if you could, if you feel the need for raising funds, you could probably go for a debt, rather than equity,
Yeah,
because
exactly. So when I
equity is
said we go
easier
for
to
more funds,
dilute.
not just equity,
Yeah,
debt equity both. So right now
yeah,
we're debt free. Right now we're debt free, so there is scope for us.
right, and that is what I was hinting to, that it is very good to kind of keep the company debt free at the same time, not go for too much equity dilution, because then the
Yes,
existing
yes,
shareholders get diluted whenever
yes.
you
Of course,
raise
of course.
this thing.
So
So
there
yeah,
is scope for
that.
for debt actually, because now we're debt free, so there is a lot of scope.
Exactly. Yeah. So that was my first question. The other question is, out of this 430, 450 order book you have currently, and you mentioned about 150 odd crores is your export order book.
Yeah, I'll just get the exact figure. Domestic was 250, I know. Transformers was 80. I'll get the exact figures. We have a couple of large turnkey. Yeah, you can say 120, 130. You can say, yeah.
Right. So my question was not about the figure per se. My question was to understand that. So right now, this entire export is concentrated towards Middle East and Gulf nations.
No, not the entire. We have business in Africa, Southeast Asia, US, etc. It's split. Sri Lanka, even SAARC countries, Bangladesh, Sri Lanka, and all these places. But there are some big orders. I think to the tune of, you can say, at least 50, 60 odd crores of orders to Middle East में होगा ही. If the total thing is about say 150 crores, then 50, 60 crores of Middle East में it should be there.
Right. So all I'm trying to understand is, like, how much order book of this export has a chance of getting delayed due to the geopolitical situation that we are facing
Yes,
in.
yes. So you can say to the tune of 50, 60 odd crores.
Okay, just 50, 60 odd crores out of 430 odd, the entire export
Yeah,
orders.
yeah.
So the rest you will have to execute in this financial year itself.
Yes.
Okay, all right. Thank you so much for the opportunity, and wish you all the best.
Thank you.
Thank you. We'll take the next question from Guneet Singh. Please go ahead.
Hi, thank you for this opportunity. Most of my questions have been answered, but I want to understand, despite this current war, would we still be able to grow 20-25% this year? That means a revenue of about 425 to 450 CR.
Yes. See, the transformers is not. Yeah, some transformers are there from the Middle East, but maybe 4-5 crores. But most of the 80-85 crores orders is domestic. So transformers, I'm not seeing too much of an issue. And in terms of exports to non-Gulf countries, it is there. See, if the war continues the way it is, technically speaking, like practically speaking, and if the oil prices in India cross 130 rupees, then then though even in India there's going to be a impact. Even transformers, maybe there will be an impact. So all industries will suffer, but I don't think it will stretch beyond, I think, 1 or 2 more months. Because what we are even hearing from our clients in the Middle East, they have also started placing orders and stuff like that, which means they are also, I think, uh, getting alternate routes of transport or things like that. So I don't think, because just generally observing their movements also, I'm feeling that things will stabilize.
Got it. So basically, I mean, even if we consider dollar prices to be around $100,
Yeah.
so we are still on track for this 425 to
I mean,
450.
$100 is good for us. If it's $100, then our exports, we get more money. So, but I mean, we are always happy with when dollars increase, because our exports
Sorry, I
are.
meant about crude prices. Sorry, not dollar prices.
Oh, crude. No,
Yeah.
crude prices. So then, crude prices, see, if it goes up very high, then I think there's going to be overall, if this thing goes on say, for another 6 months, then though
No, if
it'll
it
be
stays current the near levels around $100. So I mean,
$100 also. Then if it stays near, see, the Indian oil companies also, they need to add at least 12, 15 rupees to become profitable. Otherwise, they're also taking hits.
Right.
So if that happens, that not 130 rupees oil prices, then to all India everything is going to slow down a bit. So that we can't predict. And US economy also, I don't think, because I'm talking to our US counterparts in the JV, their economy also can't sustain $5.5 per oil prices per gallon.
Right, but if we look at a current like March, April, May period, have we seen any significant hit in our margins or volumes? What is the learning from
So
this?
we did so March. So like I said, March, a lot of our Middle East turnover got hit. Some were on the ship, some were about to dispatch. Payment has come. It could not be. It basically got into cash. We could not sell the product. It became inventory basically. So that phenomenon happened. Also because of oil prices, you will see most of the transformer companies and capital goods companies, their profitability projections got hit. तो वो तो है ही, but it's more of, I think, minimum. I mean, in an optimistic situation, 1 or 2 months affair, and in the worst case situation, 6 months affair, because you all within 6 months you expect to burn through all your old orders. So 2 to 6 months is the max window. The new orders will be obviously at new prices. So not too concerned long term about bottom line, but if such a situation exists for 7 8 months, then the top line for all companies will be impacted. But don't feel like this is going to stretch beyond 1 or 2 months.
Correct. So currently, I mean, from what I understand is that we are not very significantly impacted, and the orders directly to Middle East are not that large. So I mean,
Yeah,
that's
yeah.
a fair understanding.
It's a large chunk of our export orders, but in the overall context, it's not that large.
Got it.
This
And
thing is, they are
second,
taking spares, so they have to run the plant. They are taking spares from us. There's no option because spares goes in small cargoes and all. When you're taking a big equipment, you need the large open deck containers and large containers, and also, वहाँ पे the shipping costs have increased, insurance has increased, so they're hesitating.
got it. And do the promoters have any intention to increase their stake in the company?
Yeah, yeah. So some of that can be, yes, yes, but the exact quantum and everything that it will be shared a little bit later.
Got it. And by when can we expect that?
So
Within.
we had actually liquidated some funds to keep possession of a shed. So as a honest money deposit for the bidding and all that. So that process is almost done. So I think maybe in a month or two. माने ये चल रहा है, but in any government sort of auction, it keeps getting delayed. So in a month or two, some of that fund which was parked as a earnest money deposit, that will come back to us, and we'll buy back some of the shares.
Got it. So it would be a share buyback where the promoters would not be participating, something of that sort, right?
No, so the promoter company is basically Megatherm Electronics. So Megatherm Electronics will be buying back the shares from the market.
All right, all right. Got it. Perfect. Thank you very much. I wish you all the best.
Thank you. We'll take the next question from Disha. Please go ahead.
Hello.
Yes,
Yeah,
Disha.
hi Disha. Yeah.
Continues to emerge as a key growth engine. Hello, am I audible, sir?
Yes.
Yes, thank you so much, sir, for this opportunity. My first question was just on your sort of margins, sir, that we can expect for FY27. So you mentioned that the new orders will have the new pricing, but the old orders that we already have, I think it'll take some time for us to pass on the pricing, right? So how
Yeah.
should we look at the overall EBITDA margins for FY27? And once we cross that 500 sort of mark, where we see the operating leverage kicking in, so how should we look at the long-term steady state EBITDA
Yeah.
margin?
Look, right now our EBITDA typically hovers around 10 to 12%, if you look at historically. But the ideal, but that is because we're always front loading the costs. Like I shared, we have spending a lot of money on the marketing side. We have to spend much more than what we are spending right now on the marketing side to grow globally. We have to get the right talent in place to make it more professionally run company. Even now, still it is more like promoter driven company, but we want to make it more professional driven company. So those expenses are one angle that will be more, and the other angle is the raw material. But raw material is not a structural thing; it is more of a 4 5 month sort of phenomenon. The most structural expenditure for 1 or 2 years we want to do on the marketing and the HR side. And but a steady state environment, say when we are doing a 500 crore business, say, or 600 crore business in say 3 years, couple of years time, there you can expect the EBITDA from the current 10-12% to be at least around 15 odd percent. That is the steady state. Am I audible?
Hello.
Yeah.
Yeah. I
Yes,
see you.
yes,
So
yes, yes.
for this year, FY27, at the minimum level, we'll expect 10% sort of EBITDA and can be between 10 to 12%.
Yes, but I'm yet to finalize the marketing budget. So that work is ongoing. I'm yet to finalize the marketing budget. So maybe when we are doing our September call, I'll be able to give the more accurate figures.
Okay, and so for this transformer, so the new capex that
Yeah.
is also coming online, post that, what is the peak revenue that we can do from this
Yeah,
the
so
new
once the
facility as
second
well?
shed, yes, so once the second transformer shed is up and running, which is also the fourth shed of the entire factory. So once that is done, that is not going to be as big as the existing. So if the existing place, say we can get say 150 odd crores, from there we can get say another 100. So 250 odd crores we can do for transformers.
And that we're planning to reach around 20, FY29.
Yeah. So let's say this year we had targeted 80 तो हो ही जाएगा order है, but say FY28 we are targeting at least 150 full capacity, 100% capacity. Then in
Okay,
the
okay.
next financial year we should get that 250. FY29, you're right.
Okay. And so for the spares business, what sort of EBITDA margin do we see for that, sir? Because I assume that's a very high margin business for us.
Yes. So we can't really look at EBITDA because in the manufacturing process, the same team that is making a coil for a furnace, they're making spare coil. Those who are making thyristor electronic stacks for the converters, they are making the electronic stacks for spares. So difficult to make EBITDA, but GVA data is available. So if you see COGS
Hmm.
in our P&L, that
Yeah.
COGS that comes to about, I think. Can you just, Mohsen, can you just take us to that slide, the P&L slide? Yeah. So COGS and direct cost, if you look at, comes to around 71 to 3%. So that is basically blended. It's sort of 80 odd percent for projects, and for spares it comes to around, I don't know if the math will add up. I'm just saying from my head, and that will be for spares it will be almost 40-45%. And for projects it will be about 20 odd percent. So
Okay. That is.
So
Hmm.
like sort of like that. So blend karke it is coming to that 70 to 3%.
Okay, understood. That is it, sir, from my side. Thank you and
Yeah.
all the best.
Thank you.
Thank you. Sir, we'll take one question from the Q&A chat box. It's from Ragesh Maheshwari. He's asking,
Yeah.
what is the expected exports as a percentage of revenue for FY27?
FY27. So if this war situation, or if I take the entire export order book, then 1 minute. So if let's assume say 50 minus, we take out transformers, we take out, of course, spares also goes into exports, but I'm not considering that. If we take out spares, so we are going to be ending up with at least 25%, 20-25%.
20-25%. And what was the share of revenue in FY26 export share?
FY26 was much lower at
Okay.
around I think 10-12%.
Okay. Okay,
Yeah.
sir. We'll take the next question from Mayank Gupta. Please go ahead.
Hello, sir.
Yeah, hi.
So I have just two, three small questions I wanted to ask. First is regarding the fourth production facility. Is it the part of 2000 MVA capacity or it is additional capacity being set up?
No, so please don't have the wrong impression. So that core, we are not a Transcore or a company like that. So our entire, Transcore, right? Like those who are making the transformer core and selling it. So we are not like that. Whatever the copper drawing or core slitting facility we are doing, that is purely for our own products.
Okay.
Yeah.
So this one, this fourth production facility is the part of the 2000 MVA capacity that we
Yeah,
have
yeah, yes,
earlier.
yes, yes. And it's
And by
primarily for induction side, not so much for transformer side actually. Because transformer, we already have many core suppliers who split and give you like Transcore, SNM, many many more. But we are doing this core splitting primarily for our induction products.
okay, understood. And the second thing, by how much time we are expecting to complete this production shed?
The fourth one.
Yes.
Yeah, so the fourth one should be, where typically the plant should be done in 6 7 months, and the machinery takes time actually in transformers like the autoclaves, winding machines. So another, so within say around within 1 year it will be done, max 1 year.
Okay. And the second thing, just I just wanted to um, just a second, sir.
Sorry, the last I missed out the last part. Hello, am I
I
audible?
think, yeah, you're audible, sir, but I think we have lost him. We'll take the follow-up question from Ketan Chheda. Please go ahead.
Yeah,
Yeah, hi. Thanks for the follow-up. So
yeah,
my question is, if I go by the projections that you have given that you want to become 1,000 crore company by
yeah,
FY32, and the kind of growth that we will also experience in the EBITDA, so that
yeah,
margin comes to about 12 odd percent even in FY32 itself.
yeah.
So we are not seeing a much drastic difference in terms of margin. And if I see, other companies, not exactly in the induction industry, but say transformer or something, they do a much higher margins. So any specific reason that why we wouldn't be able to scale our margins higher?
No, no, of course. So, like I said, the EBITDA should be at least like if you're doing a lot of exports. So, what we are planning to become a global alternative for Inducto Thumb, right, globally. And if we are able to realize that ambition, you see Inducto Thumb's bottom line, they do about 1,000 crore of business, they do about 200 crores of PAT. I think if you just they are not listed in India, but you can check the data from MCA. Right. So that is what we want to get at. The margins are very big, and that is because India is their manufacturing hub. So they manufacture in India and then they sell abroad. So that's how it they are able to generate the profit. So we are being a little conservative. We know that if we are able to achieve our vision, then the profitability is going to be much, much more. The
Okay.
products
No, so
sell at a
because
much,
if
much
I
higher rate abroad than what they sell here.
Right. No, because if I just do the math on the numbers that you have given, the 20% CAGR
Yeah,
until FY32 and 4x on your EBITDA
yeah.
from FY26 numbers, then we come to EBITDA margin of 12.2%. So that is why I was because
Yeah,
your guidance, your aspiration.
in the guidance, what we've done, we've just given a generic, sort of conservative approach that, and the generic approach that the EBITDA is going to grow at a much faster rate than the turnover. So that is essentially what we are trying to get at.
All right, all right.
Yeah.
Okay, fine. Thank you so much.
Right. The true, right now, with the current product mix that we have right now and the geography mix that we have, the correct EBITDA is actually around 15% right now, which is being reflected, or maybe say 14%, which is being reflected as 11% or something because we are front loading a lot of our costs. We are pricing our product low to enter the market and things like that. If you're able to realize the export ambitions that we have, then definitely the bottom line will be much, much higher. You can check Inductothum data on MCA. So
Sure,
even if you say we price our products 5% less than them, even then you'll be able to get a better idea.
sure, sure. Thank you so much. Wish you all the best.
Yeah.
Thank you. Sir, since that was the last question, would you like to give any closing comments?
Yes, so if you look at it, so I think for a medium term or even long term investment opportunities, I think definitely you should look at Megathum. And there are a lot of tailwinds. One is the infrastructure story of India, engineering story of India, and also the greenification or the green transition, be it renewables in India, be it induction all over the world. So all the tailwinds are in our favor. 6 month hiccups with war and all these things can come. But if you're I think invested in the medium term or long term, then that is where we are truly going to see the rewards. Because unlike IT industry and other industries, here the inertia, even I experienced with transformers, the initial inertia is quite strong, but once you're able to get through that, then the real growth comes. So I think if you're invested in the medium term with Megatherm, the returns are going to be worthwhile. Yeah, so that's my comment.
Yeah. Thank you, sir. Thank you to the management team, and thank you to all the participants for joining on this call. This brings us to the end of this conference call. Thank you.
Thank you. Thank you.
Thank you.
Thank you.